Hey guys, welcome back to a brand new video, and today we're going to be talking about a highly requested topic, and that topic is why I sold my EROS stock. I've received a ton of comments asking me why I've sold my position, why EROS didn't go up, how I knew to sell my position before the dip, and also I had viewers asking me what they should do with the shares that they still own and hold. So we're going to be going through all of that today. So before we get into this, I just have to say a massive thank you to you guys who are supporting my channel. My channel is now officially bigger than my hometown of 7,000 people. We have over 7,000 subscribers, 7.2 to be exact. So I want to give a shout out to every single one of you guys. And this is going to be an ambitious goal, but I think we can hit 8,000 subscribers by the end of next week. So, if you guys are new or returning and not yet subscribed, help me out with that goal to hit 8,000 subscribers. Hit that subscribe button, turn that subscribe button gray if you haven't already. Now, I also had some viewers question why I didn't inform you guys that I sold my position, why I didn't do a video on it immediately. And to be honest, the answer is because I think the company is still going to be a strong company after the merger. I didn't want to tell everybody to sell out and then they miss out on a big opportunity to make a lot of money. However, I started to feel less and less confident about that happening, so I eventually made the decision to sell out of all of my shares, and I chose to keep that private information just in case the stock skyrocketed. I didn't want to be the cost of people not making all that money. However, to help solve that problem, I have officially launched my channel memberships, so you guys can become a member of the channel and become a part of Rex Nation is what we're calling it, for $5 a month. For that $5, you get immediate alerts when I buy or sell shares of a company. You also get members-only live streams every Saturday. You get access to the members-only Discord chat, and you get access to privately chat and ask your questions to me, and you will always have those comments and questions answered by me if you are a member. As my channel has seen tremendous growth, it's getting harder and harder to respond to every comment that you guys leave in the comment section. It's a good problem to have, but this again is just an opportunity for me to help fix that. So I would encourage you guys to think about becoming a member of Rex Nation. Hit that join button down below if you want more information. In this video, I'm not going to be going over EROS International and STX Entertainment and the future catalysts of the company, or why I bought into the company in the first place. I already have an entire video dedicated to that. Go check that out right there. There'll be a card up there and a link down in the description. I did an entire video covering EROS International and STX Entertainment's merger and why I think the combined company is going to be strong. So if you want more background information on the company, go watch that video because this video is not for you. In exchange for that information, I'm going to be going through why I sold my shares, why I think the shares did not go up, why I started to doubt the company, and what I recommend all of you guys to do if you still hold or own your shares. So if we go to our trusty Google search and Google EROS International, we can see that it's struggled a bit over the past few days. We were sitting at $3.80 a share, and then after the news officially dropped that the completion of the merger had happened and that they are merging, well, the share price tanked and it's in the twos now, and we're sitting at $2.68 per share currently. So I originally bought these shares around June 15th, June 14th, somewhere in that window that I am hovering over on the chart right now at $3.15 a share. I owned 2,000 shares of the company, and I ended up selling the shares on July 23rd at an average cost of $3.54. So, how did I know to sell? How did I know that this stock was going to drop in value after this news happened? Well, to be honest, it was a lot of things coming together for me. Originally, I was convinced that there was still speculation on whether or not the merger would happen. I thought that there was still a chance that the merger would not happen and they would not go through with completing the merger. And normally if you want a huge stock move, you need speculation. You need that speculation of whether or not something is going to happen. You need something to buy into to take a risk on. However, what I didn't realize was there were multiple press releases released by EROS International and STX Entertainment saying they are sold on completing this merger and the merger was going to happen. I looked past all of that stuff, and I didn't pay attention to the fact that after those press releases, the stock price didn't even move. It didn't support the stock price at all with those press releases. That was a major red flag to me. So there was no speculation. The merger was going to happen barring any disaster from like an antitrust law or something to that matter. There was really no reason for speculative investors to buy into the company. The people that wanted to invest in the combined company knew the merger was going to happen and they invested in the company. And the stock price didn't move up. That should be a big sign when after big news is confirmed like that and the share price doesn't go up, even though the merger hasn't technically been completed yet. It should be a red flag that, wow, maybe this really isn't going to rocket after the merger is officially completed and the combined company is a thing. The other thing I saw when I bought into this company was a very, very undervalued combined company. I didn't look at EROS International individually. I didn't look at STX Entertainment individually. I looked at the two combined together and liked what I saw. And to be honest, I'm not changing my tune on that. I still like what I see with the combined company. I think it's going to be an extremely, extremely successful company over the next 3 to 5 years. However, I saw a better opportunity for my investment where I could make more money quicker, in my opinion, and I was lucky enough that it worked out. I sold all of my shares and bought into CleanSpark, which I recommended to buy in the $4 range, and now it's over $7, so I'm almost doubled that investment in a matter of 2 weeks, which is insane. So that all played out greatly for me, and that led you guys to be like,
well, that was kind of a jerk move of Rex not to tell us he sold.
But like I said, I wasn't 100% certain that the stock wouldn't skyrocket after the merger was officially completed. I just had a feeling, and sometimes you just got to go with your gut feeling. I wanted to take my minimal gains, and I'm glad I did. I took my minimal gains. Sometimes you have to do that if you don't like what you see anymore. You should never look into a company and be set concrete that you're going to be invested in that company. If something changes or new information comes upon you, you shouldn't be afraid to sell your shares. So for example, on April 17th of 2020, this was one of the first official press releases that basically said EROS and STX were for sure going to merge together. And if we look at the stock price on April 17th, we saw a jump from under $2 a share to over $3 a share. That was a good initial jump upon the release of this news. However, over the next 2 days, the share price lost almost all of its gains. And ever since then, it slowly started to climb, then it drops back, then it slowly starts to climb, and then boom, now we see the big dip. So the reason that the share price was slowly climbing is because investors do like the combined company. Investors do want to invest in this combined company, and they really, really thought that upon the official completion of the merger, the share price would explode. However, it didn't, and there can be multiple reasons for that. One of those possible reasons is because big investors, I'm talking about institutions, hedge funds, people with that sort of money didn't value EROS and STX as a combined company as highly as us retail investors with limited power did. Another possible reason for that is because EROS investors were tired of stagnant gains. If we go to the 1-year chart, we can see they're up and down. It's this very stagnant chart. Investors that invested back in 2019 really haven't made a whole lot of money depending on when they bought in, of course. If they can time it perfectly, yes, they've made some money. But the reality is most people don't time investments perfectly. So this chart is almost even over the past, 9 to 10 months. So over the past 9 to 10 months, every single investor that bought into the company has not made any money because it goes up, then it retreats all the way back down, then it goes up, then it retreats all the way back down. So the chances that some investors were just tired of the stagnant gains, zero gains, and they just thought, okay, we're going to have another pop here, but I'm going to get out of my position on that pop. I cannot take this any longer. I cannot take stagnant gains any longer. I want to be making money, not just sitting on my money, losing money to inflation. So that could have happened. After they saw the initial pop from the completion of the merger, a lot of investors could possibly have sold out, which then triggered stop loss after stop loss after stop loss after stop loss, which really, really brought the stock price down. Now, that's just a possibility of what could have happened. In addition to that, another possibility is just that EROS International doesn't have enough publicity. Not enough investors know about EROS International. To be honest, if you asked a random investor on the street, hey, are you aware what EROS International is? They would probably say, no, what's that company? Or, Hey, are you aware of what STX Films is? No, what's that company? That would probably be their answer. And that's a big deal. If a company doesn't have good publicity, they're not going to have big waves of investors coming in and investing in their company. So that was the third possibility. I just laid out 3 possibilities of why the stock price possibly tanked over the past few days after the completion of this merger. Now, I'm not a financial advisor. I do not know that those reasons are the exact reasons by any means. Those are just my ideas, and maybe it's a combination of all 3. So you may be wondering what I see in the company now. Well, I looked past the probability of potential shareholder dilution from the deal. If we look at EROS's balance sheet, they have massive debt in comparison to how much cash they have on hand. That's another red flag. In addition to that, when I look at the share statistics, I can see that EROS already has 177 million plus shares outstanding. That means there are 177 million plus shares publicly traded on the markets. That is a pretty high number for a company that's that cheap of a price. You would need some massive news to even move the stock price a little bit at that many shares outstanding when the company is valued at $2.68 a share. So like I mentioned, I looked past the probable dilution that the merger would bring to finance the merger in the combined company because EROS has a lot of debt on their balance sheet right now. It's no secret. They don't have a whole lot of cash on hand. So you may be wondering now what I recommend you guys to do if you still hold or own shares of EROS International. The quick answer is I would hold those shares if you're not too deep in the hole. However, if you bought it $4 or higher, I would say sell now, cut your losses, and try and make that money back in another company. Now let me get into why I recommend most of you guys to hold your shares. The fact that EROS International is valued at less than $3 a share right now means that there's really not a whole lot more room for them to go down without being priced for bankruptcy. And I really don't think the company's going to go bankrupt. There hasn't been any talk of that anytime soon, especially with the combined company and the amount of money STX makes. And like I said, I do think the combined company is going to be a strong company. I just don't want to put my new capital into a new position with EROS International because I think I can make a better return in another company like CleanSpark or if I can find another workhorse. So my answer to you guys, if you're still holding or own shares, is to keep holding those shares for the long term and sell them at or just below your average cost per share. The share price is going to recover because remember in the stock market, every reaction is an overreaction. So if you have a reaction to the downside, you're going to have a counter reaction back up. And vice versa. However, if you really want to sell your shares and don't want to hold that money in the company, I would suggest only selling those shares if you see an absolute better opportunity for your money. If you see a CleanSpark in my example where you need to put money into this company now before the share price explodes, then I would sell your shares right now. But if you don't see a better opportunity than that, keep your shares invested with EROS. So with that, guys, that's all I had for you guys today. We kind of went in depth a little bit. We talked about a subject I don't normally talk about. I hope you guys really enjoyed this video. Leave a like down below if you did. Subscribe if you guys are new. Consider joining Rex Nation down below for $5 a month. And with that, guys, have a great rest of your day and have a great Thursday. I'll be back on Friday with a brand new video. Peace out.